What's up, traders? Welcome back to Gen W. We just came out of a low volume holiday stretch. The market made new all-time highs, and after nearly 2 months of neutral to bearish concern, price is forcing us to reassess the bigger picture. Today, I'm breaking down SPY, QQQ, NVDA, Microsoft, Amazon, Google, Tesla, Palantir, and Micron with exact levels, multiple scenarios, and how I'm thinking about positioning going into this week. If you want structure instead of noise, patience instead of panic, and levels that actually matter, you're in the right place. And real quick, if this is helpful, hit the like button, subscribe, and turn notifications on so you don't miss these weekly levels. Starting with the SPY, coming out of the holiday low volume period, we made a new all-time high at 691.66, and that matters because just a month ago the narrative was very different. After the pre-Thanksgiving breakdown, there were real concerns around the AI trade, large cap tech returns, and whether growth could continue fast enough to satisfy investors. At the surface level, those concerns now look speculative, as we challenged all-time highs in mid-December and officially broke out to new highs this past Friday after Christmas. Looking at volatility expectations, the weekly options expected move sits between 696.89 on the high end and 683.73 on the low end, which is wider than last week and signals belief that the market still has room to move. Structurally, this is very healthy. After the Thanksgiving breakdown and equal high test at prior all-time highs, SPY pulled back and formed a new higher low at 675, resetting the daily trend. We now have a new higher high, the 5-day moving average crossing over the 20-day, price holding above the 50 and 100 and well above the 200-day moving average. That alignment allows us to shed much of the neutral to bearish concern from the past 2 months. Until proven otherwise, SPY is bullish. From a pathing standpoint, there are 3 scenarios. First, continuation higher. Friday printed an indecision-style candle but still made a higher low and higher high compared to Wednesday, which is strength. A break and hold over 691.66 opens targets at the weekly expected move of 696.89, with Fibonacci extension targets near 694.86 and 701.31 if risk-on continues. Second, bullish digestion after a straight-up move from 675, holding and consolidating above 689 near highs would be constructive and likely lead to a more sustainable breakout. Third, a pullback that remains bullish. A break under 689 could target 685 or even 679.75, which aligns with prior support, the Fibonacci golden pocket, and the rising 50-day moving average. In that scenario, I'd be watching for reversal signals like hammer candles, double bottoms, or inverse head and shoulders patterns. The key takeaway is that all 3 paths still resolve bullish. My posture is calls over 691.66, or short-term put scalps into pullback zones before flipping long if the setup presents itself. Now let's talk about QQQ, because this is where confirmation matters. Unlike SPY, QQQ has not yet broken its last lower high near 629. While we do have a higher low from the pre-Thanksgiving breakdown, the trend hasn't fully flipped bullish yet, and that's important because technology is the largest weighting in the SPY. If QQQ doesn't participate, SPY strength becomes less reliable. There are 3 main paths here. First, continuation higher. A break over 625.80 would break the downtrend line from all-time highs and start forming a double bottom. From there, I'd look for a push towards 630, a pullback to the trend line, and then a move back toward all-time highs near 637. Second, a shallow pullback. 618.50 makes a lot of sense as support with prior structure, the 20-day moving average, and the rising 50-day all lining up. Sellers failed to push price below Monday's low last week, which is another sign of strength. If 618.50 breaks, then 613 becomes the real line in the sand. You don't want to live under that level unless it's a quick breakdown and recovery. Third, heavier selling pressure. If 613 fails, a move to 607.50 becomes realistic. That would still technically be a higher low, but would place price under key moving averages and begin forming a potential double top. That bearish scenario doesn't activate unless the neckline near 601.65 breaks, which is not my base case, but should stay on your radar. NVIDIA reclaimed bullish momentum this past week, making new highs near 192.75. While it still needs to form a clear higher low, price is well above its moving averages and much closer to a fully bullish daily trend again. From a pattern standpoint, We have a clean double bottom breakout with equal lows near 171 and a neckline break above 185.85. Friday pulled back slightly after making new highs, which is actually constructive. A retest of the neckline near 185 would provide a clean entry for continuation. If that level holds, the expected move projects toward 198 with intermediate targets near 195.75. Structure to the left is thin, meaning moves higher could be fast. I'm very interested in call options if we get a clean neckline retest and hold, especially with the 50-day moving average sitting right there as confluence. Microsoft is forming a bull flag on the daily time frame. We've put in a subtle higher low from the Thanksgiving breakdown, and over the past 5 sessions, price has printed tight consolidation bars, including Friday's inside bar. This structure resembles an ascending triangle. A break over 488 opens a move to 493, which also acts as the neckline of a larger double bottom. A break and hold over 493 targets 512, though the 50 and 100-day moving averages overhead could act as resistance. On the downside, if price fails and breaks under 483, put opportunities toward 476.60 at the 200-day moving average become valid. Trend here is neutral to bullish, but both sides offer opportunity depending on confirmation. Amazon is one of my favorite setups right now. AMZN has formed a new higher low, and the last 2 sessions have printed tight inside bars. A break over 233 opens a clean move back to 238.75. That move would start to form a double bottom on the daily time frame, and a break over 238.75 opens targets toward 244 and potentially 250. Amazon already sits above the moving average cluster, which gives it a structural advantage over names like Microsoft. This is my top short-term setup if strength continues. Google continues to look strong. A bull flag formed on the daily, and while price overshot the 310 level slightly, notice how quickly it reclaimed it. The past 2 sessions have printed tight consolidation near highs. A break over 315 opens a clean path toward 327.50. The broader trend here is already bullish, making this a continuation setup rather than a speculative one. Tesla remains the stock to watch. This is a breakout from a larger weekly cup and handle pattern. For the past 2 weeks, I've said the break over 471 would be key, but that consolidation or pullback would be necessary to confirm the move, and that's exactly what we're seeing. Price has been consolidating under 488.50 and has started drifting back toward 471. That's where I want to see a bottoming formation for a day trade back to 488. It would not surprise me to see an overshoot that fills the gap below and tests 456. What I'm looking for is a strong daily bottoming pattern like a double bottom or inverse head and shoulders. That's when I start adding swing calls, with the bigger ad coming on a clean break and hold over 488.50. Also remember, Tesla often needs a catalyst, long consolidations followed by explosive moves. A 5 to 7% up day is usually the signal that it's ready. Since the pre-Thanksgiving breakdown to 151, Palantir has been on a rocket ship. 2 weeks ago, a bull flag formed under 187 and broke out, but price has been rejecting the 195 level. Friday's pullback looks healthy if 187 can hold as support. If it does, a move back to 195 is likely. If price breaks and accepts above 195, then 199 becomes the next target, followed by a thin move back to the 207.50 all-time highs. If 187 fails, puts toward 179 are possible, but this range is noisy and less attractive given recent behavior and moving average placement. Micron has shown strong momentum following its most recent earnings. The first area I'm watching is a pullback to 277.50, which aligns with clean structure and the 5-day moving average on lower time frames. If that level holds, a move back toward the recent highs near 290 is very straightforward. If price breaks below 277, I'm not interested again until 260, where stronger support and momentum are built out. The big takeaway this week is simple. The market is strong, but strength does not mean recklessness. We let price come to our levels, we stay patient, and we trade structure instead of emotion. If this breakdown helped you, hit the like button, subscribe, and turn notifications on so you don't miss the next update. Stay disciplined, stay patient, and I'll see you in the next one. Jen W.